Mixo, looks like we're setting up for a day of modest gains across the Asia-Pacific. That'd be two back-to-back days of gains. But how fragile does this look to you? How are you trading around the volatility?
To be honest, it's really difficult being in Asia and talking about markets because all Asian markets are doing these days is follow what's happening in the US. Really, if you look at the correlations between previous day US performance versus today's Asia performance, it's been nearly 1. And this has been the case since early August. So basically what Asian markets have been doing is what the US does overnight. So this makes it very tricky because for the US markets, if you think about the valuation and earnings, valuations look very close to where they could bottom out. But on the earnings side, there's probably still more downside. Just yesterday, JPMorgan's US strategist cut their EPS forecast for 2023 to 225, and that's below consensus at this point.
Yeah, there are plenty of headwinds for Asian markets at the moment. We have dollar strength, central bank tightening, recession risk weighing on the minds of many people as well. Is there anything that you can point to, though, that is fundamentally positive?
Fundamentally positive. If you look at MSCI China, it's trading at 9 times forward PE. That's fundamentally positive. If you look at Chinese earnings, they're not being downgraded anymore. That's fundamentally positive. If you look at particularly the China internet space, we are actually seeing upgrades on forward earnings. And this is, if you look at Asia overall, right, we are at a situation where the business cycle is bottoming out. If you look at our business cycle monitor, it's at levels where it historically tends to bottom out. Similarly, like I said, on valuations, we're at bottoms. On earnings, we're at lows. So the Asian setup looks really positive. The only issue, like I pointed out, is that we're still following U.S. markets. So it will really depend on how the U.S. market performs for these Asian gains to deliver here.
Does that also apply to China? Because we're seeing China doing its own thing, given that they have their own policy issues, their own economic issues. And when you say when the valuations are looking attractive, other than that, what about the policy uncertainty, given the party Congress didn't really provide that much in terms of economic support or more stimulus on the way?
Yeah, I think from if you look at China, right, like the market, on valuation perspective, it's definitely extremely low. And like I said, the earnings are bottoming out. You're right that if you look at performance over the last 2 years, what we've seen is that EM Asia ex China has been basically following the S&P through and through over this entire last 2 years. But China has gone on its entirely different trajectory. And you're very, very true that part of this has been fundamentally driven, but part of this has also been driven by policy risk being priced into the risk premium. The argument that we made in late August was that China's local risk premium across a variety of frontiers was peaking at that point. And we were arguing that that's the bottom in terms of China risk pricing. And the improvement from there has been gradual, but I think it's still improving. If you look across US-China relations, if you look across the property sector issues, if you look across regulation issues, as well as zero COVID, all of these things are improving. It's just that the pace is very gradual.
Mixo, we are also expecting this policy speech coming from the chief executive in Hong Kong, trying to make the city more attractive. What do you expect from the markets there? And when it comes to as an individual in finance and based there, do you expect, what do you need to see in order to make the city more attractive?
I think the biggest issue with Hong Kong right now is the COVID policies, right? And that's been restricting flow of people into Hong Kong. And as you know, Hong Kong being an open financial center needs to have people coming in and out. And so if we could have easier mobility into Hong Kong, that will definitely help. Lesser restrictions, that will definitely help. And so if we get moves in that direction, as we have been getting, I think there's no fundamental problem with Hong Kong continue to be a very strong financial center.
We have, of course, had China delay the release of its GDP data, a bunch of other data as well. I'm just wondering, what's your gut telling you here? Has this happened for boring bureaucratic reasons, or are these numbers just too hideous to release during the People's Congress?
I wouldn't want to speculate on this. It could simply be that the numbers haven't been put together yet, so we'll have to wait and watch.